For 26th, I was a little hesitant there because we have a new I have a new setup. All the systems got moved and are reset up, and I think it's working properly now. On top of that, I have a tropical flu I'm just getting over, so you have to know that I've got a bad cough to come along with that. So yeah, Christmas is behind us, New Year's is coming, and we, as far as our everyday business is concerned, we have a couple updates. So we're going to run all of our models and all of our swings, all of the equities we follow through the grinder between now and the 1st. So we're going to complete the models. We're going to run swing trade reports on all the swing equities that we follow. So that's a major amount of data. Some of that data is going to be included for free to our email list, just so you know. So that's on my Twitter feed. And then Christmas offers. There's a 30% off over Christmas. That's on my feed. Xmas 30 is the code you use. Other than that, I don't think there's any other. Well, I guess there is on our blog. It describes what our plans are for the new year. So for the equity fund and for the models for coding toward an IA platform and eventually machine trading and all that kind of stuff, it's all detailed there. Yeah, so those are the updates. As far as what's happening in the market, so I went long S&P, well, SPXL actually, the BOMN ETF. I was watching the S&P conclude tight time frame, so it's not real predictable, but this model is a 1 minute tight time frame model. This triangle here just highlights the area that I was buying in, and it did end up taking off. I was expecting it to get flight or pop or drop at 10:30, and it did get flight, but then it it came off and got soft. Now it's right at its decision support resistance on the model, mid quad we call it, and it's looking like it might get going here. It's just over VWAP, but I'm in 5/10, so a fairly large position. So when I'm in 5/10, which is unusual, I'm in something to win it. So I was watching very close. I was prepared to let it come off at least here to 266.82. Had it, I would have hit it for at least one more tenth, if not 2/10. So that would have put me in at 6 or 7 tenths at that point. And even if I had to, I would have even considered mid quad on the bottom. Well, this model isn't built out yet, but the mid quad would sit. No, I can't even give you that right now. But I should be able to. I guess I can't. Anyway, I don't think that that's in play. I think, well, let's just take a look at it from a wider view here. That's the problem. So mid quad is sitting here, 265.62. So I may have even let it go down to 265.60ish and hit it really hard there. And if it failed, then I would have had to cut for a loss and taken the loss in here. So we'll see. It concerns me that the quad we're entering into now, the path of least resistance is down to that mark, but that doesn't mean it's going to happen. So we'll see. That's my S&P position. As far as the morning momos that I was watching, IGC, so I never got involved in them, but IGC is 83%, so it came off considerably from its highs. Not something I would consider for a hold. There's your daily chart, so you can expect that not to be a long hold for sure. DMPI, this is another one that we had over the days before Christmas. So you can see what this one does too. Not my favorite. Could be bottoming, sure, could be bottoming, but again, I don't like poorly structured trades, so if you can't get them structured on the weekly, I mean, the weekly says, yeah, it's a possible bottom. So that's your scenario with it, possible bottom. It's over its 20 MA on the weekly, but how did it do last time? Didn't do well, but this is a bottom formation on the weekly, so probability is there for a bottom. APTO, so this is the 5-minute chart. Didn't do great, and then it came back after the washout. I mean, great as far as at the open. Here's your daily. Careful. It's obviously a trending stock, and it's well up over its 200 MA, and whenever that happens, you want to allow for the 200 to meet price, or at least your 20, 50, and 100 to see how they do. So that's APTO. FTFT. This one I was watching the closest and just about executed on it, but I wanted to see. So this is the reason I was thinking about executing, because I was thinking, well, you know what, we're probably in a new part of the bull run here, and if it's anything like this up here, all I got to do is nail the bottom of the candles. But that's fairly risky. You got to be on top of it, set your stops. I didn't get involved anyway. If you back check this chart a bit, you'll kind of get a feel for how it functions. So this is what I was thinking. We're either in the second or third or fourth leg of what happened last time. So it's not awful, actually. In fact, if you caught the bottom of these candles, you'd probably do well. I don't think it'll turn around. I think it's going to be fine. I think it's going to, it'll turn around after, like it did last time, I guess is what I'm saying. INSY, one that I've followed for some time now, traded really well actually through the day, through the morning. Real consistent trader. It's traded up through these MAs like a champ, perfectly, technically speaking. And now it's on its way to its 200. So would I take a position here long? Most definitely not. I'd wait for it to prove over the 200. That's INSY. SPY, the S&P over lunch. Soft. We'll see how I do. Now we also have oil on a rampage today. There's some news about is it Liberian oil fields blowing up or whatever. I was busy, so I didn't see. In the actual algorithm model, it is divergent to the bullish side. It has tried in past, since its bottom, to be divergent to the bullish side on 4 or 5 other occasions that lasted 2 or 3 days, 1 to 3 days at a time. This is the first one I think that got bullish midweek. So to the divergent side, like outside of the model. So it's doubly divergent, like that. This also is not friendly to the shorts. So these are all the trendline resistance that were mapped out a long time ago. In fact, this whole channel here, this was all drawn out when trade was back here. And it played out exactly like the model. And then it worked its way up through, significant resistance. And as far as trendline resistance is concerned, any trendline resistance it's going to run into now is weak, like in, relative to. So that's quite the case for the bulls. I don't believe in it, but I don't believe in oil over, call it $36. So don't listen to me. Seriously. Listen to Epic's model when you're trading. But don't listen to me as far as bias. I think it's sludge. That's worth nothing, basically. But the world needs it right now, and for whatever reason, we're able to trade it up. And will I go with that? I'll probably flip soon enough. As soon as it gets divergent enough, and it's up here in its new range, and it gets structural in there, I'll probably trade it up too. But I want to see that. So anyway, I've got some important updates coming out on it because there are some resistance areas, just not these trendline resistance areas. So between, let's put it this way, between where it's trading right now and about 62, 63, there's significant chart resistance, just not trendline resistance. So that's oil. So new updates come out tonight. Gold is really interesting. I won't open the whole model right now. Gold got it. There was a time cycle completion right here, and it skipped up. So, you know, as you get close to these time cycle completions, the big ones, you can expect to go up or down, right? Pop or drop. Well, it popped, and it's done really well. So I'm watching that close too. So I don't have any real specifics on those for you. I'll have more specifics tomorrow because all the publications will be out in the next couple of days. So I'll start to update you on all those and the dollar and various others. Everything we follow, I'm going to update on our midday reviews here. As far as how our alarms went here, I just want to bring up. There's a couple that alarmed here this morning. Let's see what these. Now the first one that I bring up is going to be slow. The first thing I'm going to get or ask Sartaj to do, Sartaj is coming here soon. And when he arrives, this specific computer for this specific purpose, the midday reviews, it's got to get changed out because the other ones are much faster, work much faster, and yeah. So he's coming in January. Where are we? Okay. JRJC and BWA I want to take a look at. So the trigger here that probably went off is that the 20 is crossing the 200, which is important because at that point, this is, you know, this breakout is starting to really prove itself. Not that it already hasn't. I would watch because the MACD is trending up. 20 MA is coming through the 200. I would watch the stock RSI. So we'll see what happens with this one. Very curious, actually. BWA. So this is a MACD alarm, it says. Interesting. I think it triggered on the MACD on the close. Either way, it looks like it's got more down. It's a good trending stock. I was going to sit in this all year and didn't. Huh. I think it's got more down. So how would you play it? You would simply wait for it to bounce off an MA and preferably be on top of its other MAs and with the indicators starting to trend up, and then you'd go long. That's one way to do it. But I think it's got a ways down yet. Sorry, this tropical cold. Holy cannoli. Okay, MACD crossing, MACD, much better though than it was. I was not sure I was going to survive. Okay, FTFT, up 40, what, we looked at that one. LFIN, so it ran again. I missed that. So yeah, bullish, 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 bullish. Good day trader, you just bring down your time cycle and, you know, trade it like we've taught you. If you don't know how, we've got lots of raw videos. We will be doing, yeah, that's the problem with that alert. It's on the close. I'm going to have to fix that on BWA. Part of our New Year's cleanup process is in January. We're going to polish everything up. So what does that mean? We're going to polish up our videos. So we're going to do, you know, a series of clean, short videos, how-to videos, right, for trading and using our models and stuff. Just polishing everything up. So why did I bring that up? Oh, LFIN. So specifically, so I have very specific videos to point to when I'm doing my midday reviews. Then I can point to a very specific video and say, okay, here, if you don't understand this, this is the setup, and watch this, you know, 4-minute video or whatever. So that's part of what we're doing in January. Near the end of January, it's on schedule. APTO, we already looked at. BOMN. So I'd be really cautious here, but at the same time, these indicators are just stupid bullish. But, you know, wisdom says let it come back down. But I brought up the weekly to show you the trajectory. Tough to call anything on it. INSY we looked at, AMPE. So this is the weekly. I'd be very cautious about it possibly remaining above that 200 on the weekly. Pardon me, sorry guys. RIOT. So this is blockchain, just add blockchain to your name. This is the weekly chart, very bullish. Who am I to deny it? But again, you want to know how to day trade. So bring your timing down to 5 or 15 or 30 minutes and learn how to use those MAs and your indicators. Size management and stops become critical. If you know how to do it, you can make a lot of money off of that type of thing. AGRX, this is a weekly chart. Really nothing to see on the weekly chart. On the daily, that's what you get on the daily. So it's a, you know, it's a bottom play. I was going to hit it down here, by the way. Didn't, and I'm paying. A lot of shoulda, coulda, wouldas. SFIX, anything can happen with this. I've said it before, and anything is happening, and I don't know if it'll continue. Technically, I can't give you anything. DSS, document sec. I don't know anything about these guys. Never traded the chart stock, but I do know that it came up out of the bowl, and this is that setup we were working on last year to make sure that our traders understood exactly how to trade this. And it came up out of the bowl and boom. And that stock RSI isn't even up yet. It's been going down. So whenever you see that where price goes up and stock RSI is coming down, that's extremely bullish. And sure enough, they doubled right in here, just off of that. So that's DSS, AGRX, IZEA, interesting. So last review, I believe it was, I was talking about possibly taking a long here, and there you go. It's not a great chart structure, but it was kind of predictable for today to happen. Anyway, stock RSI's turned up too. But look at that MACD, it's pretty much dead. So there's not a lot of life in there. CUI, bottom play, I don't think it's done. It might prove me wrong. I think, you know, just seeing a gazillion bottom plays, typically what happens is this, this structure where it fails here at the 200, the next time it'll probably pop up over it and probably fail. So it's probably got 2 or 3 more legs of down, but I could be wrong. BTE. So what's coming next is a whole bunch of oil energy considerations. I don't know. There's not a lot I can tell you here. I mean, it's either going to prove itself for the 200 or it's not. But I mean, look at the chart, and it's kind of standard issue for its segment. Here's another one, almost identical, and it's right up to its 200. INVE, bottom play. This is one of those charts where literally near anything can happen. It's just that aggressive. It's very likely, it's so hard to tell, right, because of the symmetry in this, but it's very likely bottom. And I'd say the bulls are deciding that's the way it is. FRTA, same, almost identical kind of a chart. Very bullish. You just go with it, with that 20, until it's run out of steam. Probably go 5 legs or so. If it goes, Comstock Resource, trading 844, 11.2%. So, here's the same structure. Up over its 220, MA crossing the 200, stock RSI is crossing, MACD slowly trending up. I would just use caution. It looks good, but yeah. Anyway, it might have some more in it. MTL, no idea. It's a tough chart. EROS, just a dog of a chart. It's sideways now for what, 8 quarters? Just gonna look at my alerts here really quick on another monitor. So Apple and 2.40% off on the day. Incredible. It's one of those things, hey, the Apple trade. I've watched it for years and never got involved in it, but I've nailed it every single time in my mind. Isn't that funny how that kind of thing works? What else is going on out there? That was big news today. So when I went long on the S&P, I was thinking, I'll get the benefit of the fact that that'll probably snap back. Just looking at the screeners here. Yeah, so pretty quiet. I would expect this afternoon to be pretty quiet. I'm going to take the rest of the afternoon off, by the way, because reporting this week, it'll be late afternoons for me because we're going to be reporting heavy. So I've got 12 to 14 hours a day in reporting, plus my mornings in trading. So you end up with a 18-hour day, and I'm going to do that until the 1st to get everything published and out. As far as the stocks that came down on the day, so I think considering Apple, I'm pretty fortunate here, and I knew that entering it, but I thought, this weakness in here, I'd probably get a bounce on, and I did get a bounce. I just expected it to get up and over at least one of these fips, but we'll see. As far as the downs on the day, SGBL or LB, SGLB never holds its gains. Sorry, guys. SAEX, careful. What else am I going to say? WMLP, not good. Oh, look at. I wonder why Long Island Iced Tea Crypto Land Company is off. Wow. The things we do as humans. It's almost half the price it was last trading day to peak. PTLA. Trending stock. Caution, caution. Chances are it doesn't hold. Why? Well, on a trending stock, or once it gets its 200 and it goes through this process that this went through, bouncing off its MAs, and then it bounces off the 200. After it does that and it succeeds once, every time it's more difficult for it to succeed. Its chances go down. Your probabilities are, I don't know the number, but it'd be about 5 to 1 against you, give or take. MGEN, anything can happen chart, no history, gets up over the 200. I'd almost go long and without even watching the chart. It's one of those charts, happens all the time. IIN, trending stock, 1, 2, 3, 4. It's almost time for it to start working its way back down through the MAs, test the 200, and possibly go again. What a trajectory. Unreal. I've never traded it. NT could be a bottom. Don't like it at all. See, this is the kind of thing I'm talking about, where it starts working through its MAs. Very dangerous. You got to know what you're doing there. And if you don't have the time to go through and tangle with all of our charts, I'll have some very specific how-to videos out and published clean, less than 6 minutes of video, most of them 3 minutes long. So we can point to them and say, watch this video before you take that entry. This one's in trouble. This is not a good chart. Light. That's really interesting. I guess I'll find out more when we publish our swing trading reviews, because it's one of the ones we follow. But that doesn't look good at all. It failed the 200. The 20 came down and then it failed the 20. And then your other MAs are coming. They should push it down quite a ways here. It's got a pivot rate, like this is a pivot rate in here, 41.48. We'll see. Okay, so that's it. Unless you guys, anybody have a chart they want to look at or offer the crew, that's going to be it for me for the day. Because I take structural trades, my S&P trade, I won't even have a stop on it. I'll literally leave the screens and not even worry about it. And I know that that's risky, but that's the way I trade. I don't recommend you trade that way until you have the comfort zone and sizing and expertise that a really experienced trader has. I figure I should take a look at AAOI real quick and SPPI. These are two dogs I've been holding. AAOI, I believe, is going to double in 2018. That's my call. It's under pressure again today. See the MAs there? Just can't get up over them. Dang it. But you know what? It's held that pivot well. And I'm confident in the company. It's for me, it's one of those plays I don't do it very often, and it's my toughest one in 2018 or 17. And I hope I'm not even going to bring this into 2018 and talk about it, because I just talked about it way too much last year. SPPI. I'll give you 10-second updates, 5-second updates on it in the future. So SPPI sold off the other day. I'm hoping it gets over this 20 and 50. If it doesn't, I might have to cut the loss. But I'm expecting this one to double too. Gold. Well, gold, we can take a look at it from a conventional perspective. I just can't bring up the model right now. The model itself has, it has resistance in the model. Yeah, I can't bring up that darn model right now, but what I can do here, I've got it on another monitor. Gold, we have very specific resistance at 1284.84 on the intraday. It downslopes very slowly. So 1284.84 today, and if we go future forward here, on the 29th, so 3 days from now, it's 1284.49. So, I mean, it's sloping very slow, like 10 cents a day down. So call it 1284.84. It gets through the 1284. See, right now it's mid quad, so it's running. That's what happens in these quads, right? It's running in the mid quad. Anyway, that particular resistance, 1284.84, is a calculation, an algorithmic model calculation based on the historical trade of the chart. It's powerful resistance. Gold has got through it before, but not for long. Above 1284.84, it has resistance on the quad on the intraday. It does downslope very fast, but anyway, at about 1289.50. And then when you're in that 1289.50 region, there's a whole bunch of resistance. So the main resistance is, in that 1288.50 to 1297.50, huge resistance there. So basically what I'm saying is that between 1284.84 and 1298, it's just massive amounts of resistance. So that's the nutshell on resistance. The nutshell on support, your main support intraday, while it's in this quad, is 1280.50, 1280.50. So anything over 1280.50 is still bullish. So now it's sandwiched between an important support and an important resistance. And as it concludes outside of that, that's going to be your indication of more up or down. But, and in Discord, I posted some notes on the gold server, just so folks know. 12/28, so December 28th at around 6 o'clock in the morning is the completion, not completion. Well, yeah, it's a completion of a time cycle. It's like the lower apex, right? So that's early in the morning, 2 days from now. So this is really interesting because there's all kinds of time cycle completions. It's stuck between support and resistance. But yeah, there'll be a big report coming out tonight on this one. Let's look at a conventional chart real quick. Gold's going to be a really interesting play. This all looks like 2 years ago, almost identical to 2 years ago. And, if I was listening to that, I'd never be in the S&P right now. I'm in the S&P because I believe that they're just not going to let it go right now. The market and the PT, so many different things. I just don't see them letting it go. If they let it go, I'll cut, at some point and take my loss. But I just don't think they'll let it go. It's at a decision point in the model, and I'm looking for up. And if I get down, this model needs to be regurgitated. But 266.80 is my guess for my down at the most. I think if anything, it'll come down to 266.80 and bounce. Maybe to the next at 266.35-ish, but 266.80 is what I look for, and then a bounce. It'll either bounce into its upper apex here or lower apex here, and that's going to come tomorrow afternoon. But we'll see. So that's that gold conventional chart on the daily. So this is interesting. So it's up over its 200. Yeah, see. Here's what's going on with gold. Here's the big news. Your MACD is up. It's over the 200. If this 20 curls around, gets through that 50, price gets up over those MAs, you've got what I call a sidewinder. See, when the opposite happened right here, this sidewinder, this is an opposite sidewinder. You see what happened, the big drop here? You can expect the same drop, but spike. So that would put it up in here. So what's the ifs? The ifs are that price has to stay up high enough for that 20 to come back through that 50 to the upside. When it does that, if price is above, it'll pop it, and you would expect, based on this trajectory, like if you had to like just, you know, symmetrically draw this out, you know, somewhere around January 15th, that's going to conclude that sidewinder, and it's going to pop. And your upside on that's 1329. But depending on where that sidewinder, you know, concludes and the pop happens, because it could happen here or here, but it looks like it would happen somewhere around here. I got to tell you, and I'm not a gold trade long advocate. I think gold is in trouble long term. I'm talking 15 years term, 20 years. But I think in the short term, and you'll probably, on a move like this, you'll probably get a double extension. Like, I hate to be crazy about this, but you're probably going to get a double extension. Yeah, you're probably going to be in the near 1400 range, I bet you, when it's all over. That's what I think is going to happen. I don't know that for sure. But oh yeah, so that brings you up to, you know, the previous high in here. That makes sense. And it happened here too. Oh, that totally makes sense. Yeah, you bring the chart out and 1400 makes sense. If it actually got going out of that bull, then you're going to see 15 and a quarter. Very interesting. I'm going to be watching this close. This will be the second model I finish tonight. I'll be doing oil first and then gold and going through them all before the first. But dang, that's structurally really good. I don't like the oil chart structurally, but structurally, technically, or, you know, bias. But gold, I think, has got an opportunity here now. What was this? 2 years ago. So I'm looking for 2015. So I was sitting literally on a beach. 2015. What am I doing here? End of 2015. Right here. Yeah, so I was sitting on a beach just down the way from here. Exactly 2 years ago. And I was going to take this trade. That would have been a beautiful trade. Now what's happened is 2 years later, it's coiled through the fibs, and it's starting to prove up over the mid. So this would be a, you know, broad cycle mid quad. I can see the quads because I use them all day, right? But this is up over the mid quad on the broad cycle. Extremely bullish. Very, very bullish. Like, not just kind of. I'll be stunned if it doesn't hit 15 and a half. Yeah, the dollar and gold, hey? So the dollar model I probably won't have done until tomorrow night. Yeah, that's tricky. But I gotta tell you, technically this chart is really bullish. See, like here's, you see, this is where the Sidewinder set up here last time. Look at what it did. You see how the 20 came down, and then it came back up through the 50, and that's what it always does. It goes up, not always, but, and it'll come back and test right where that 20 is coming through the 50. You see that? Like this is a textbook Sidewinder here, and then boom. Textbook. Like that couldn't be a better example. And the tighter it is, so this one isn't that tight. It's tight enough to get that, but the tighter it is, the more aggressive that upside is. So that same scenario with that 20 and the 50 and price and the 200 is all setting up here. Now it's a little lower this time, a little closer. See the entry of it right here in the 200, the relationship between them. So this one's probably going to be tighter. Very, very bullish. It's just that once you know how predictable that Sidewinder is, you just don't mess with it. But price has to be above the MAs. You have to remember that. So price has to get above the MAs. It gets its pop. Quite often it'll come back and it'll test right where the Sidewinder concludes, closes, and then go. But totally textbook. So that's going to be very high on my watch list. Very, very, very high. Anybody else have anything for now? The dollar and gold, I can't give you the relationship. That's not really my study. Oh, it's not my study. But I'll try and give you more of that when we have the model for the dollar published. Cool, I think we're good. It's 12:49. I'm not going to get aggressive at all this afternoon. In fact, I'm going to take the afternoon off. I'm just looking here real quick. Yeah, and yeah, big publishing this week. So afternoons are off for me, and I'll leave the trading room open. You guys have a great day. Talk to you later.